Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Nintendo stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Nintendo develops video games and video game consoles. It originally produced handmade Hanafuda playing cards. They made their first console in 1977. They called it the Color TV game. The company was red hot in 1985 when they released the NES, Nintendo Entertainment System, with Super Mario Bros. The NES was by far my favorite video game console. I was so excited when I was in 5th grade and I got Mike Tyson's Punch-Out. I could spend hours talking about the games: Tecmo Bowl, Super Tecmo Bowl, Metroid, Arkanoid, Bases Loaded, Double Dribble, Super Mario Bros., and so much more. The company has produced some of the most successful consoles in the video game industry, such as the Game Boy, the Super NES, the Nintendo DS, the Wii, and the Switch. It has created numerous major franchises, including Mario, Donkey Kong, The Legend of Zelda, Pokemon, and Super Smash Bros. The company is headquartered in Kyoto, Japan, and was founded in 1889. The ticker trades on the OTC, Deutsche Börse, Mexican Bolsa, London Stock Exchange, and Tokyo Stock Exchange. Let's get started with the model. This is a large cap company, 59 billion market cap. They're trading at $63 a share, and they have 939 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. Their free cash flow went up a lot from 2019 to 2020 to 2021. Their fiscal year ends March 31st, so their 2021 numbers are from April 1st, 2020 through March 31st, 2021. They only report their cash flows on year end, so I don't have the trailing 12-month free cash flow. I just use 2021. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that more than doubles from 2019 to the trailing 12 months. Revenue is the sales for the company, and that peaked in 2021 at close to 14 billion. It was a little over 13 billion in the trailing 12 months. This is the company's income statement. All their financials are in Japanese yen, but on my Excel spreadsheet, I converted the numbers to US dollars. The top line is the revenue, the sales. That was 1.7 trillion yen in the trailing 12 months. Below that is the cost of revenue. These are all the expenses directly related to generating the revenue. All the expenses related to manufacturing the products are part of cost of revenue. Revenue minus cost of revenue gives you your gross profit, and that peaked in 2021 at 970 billion. It was 936 billion in the trailing 12 months. Below that is their operating expenses. Their main operating expense is marketing. Gross profit minus operating expenses gives you your operating income, and they have lots of operating income every year. It was really high in 2021 at 641 billion. They received 2.8 billion of interest on their investments. They don't have any long-term debt. They did pay a little interest on some of their lease payments of 269 million. Then you have your pre-tax income, then your taxes, and the bottom line of the income statement is your net income, which is really high in 2021 and the trailing 12 months. This is the company's income statement from their financial reporting. And this shows us the last 9 months of 2020 and the last 9 months of 2021. Their revenue declined from 1.4 trillion yen to 1.3 trillion. Almost all their revenue comes from Nintendo Switch, and they generate the most revenue in the Americas. Next is Europe, then Japan, then the rest of the countries. As of the end of 2021, they sold over 100 million Nintendo Switches. You have to multiply all these numbers by 10,000. And if you include all their software, that's over 760 million units. Their gross profit is down slightly from last year. Same thing with their operating profit. They do receive lots of interest income. They're pretty much debt-free, so they're just rolling in the cash. This 19 billion yen is their share of equity investments. These are their investments in other companies. And that's a big reason their non-operating income is up so much in 2021 compared to 2020, because of those equity investments. Also, foreign exchange rates have moved in their favor. They posted a gain of 17 billion. So their profit in 2021 was pretty close to their profit in 2020. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates from its operational business. They generated more cash flow in 2021 than 2019 and 2020 combined. Over 600 billion yen. That's a little less than 5 billion US dollars. And since they're a manufacturing company, they spend a good amount of capex, over 7 billion in 2021. They did spend a lot more in 2019 and 2020. Operating cash flow minus capex gives you your free cash flow. And they have a ton of free cash flow, so they do pay a dividend. And it looks like they bought back lots of stock in 2019. And the rest of the funds they use to grow their business, they do lots of acquisitions. You can see how big their investing cash flow is. That's where acquisitions go. I like to track a company's revenue, that's the blue line, and operating cash flow, that's the orange line. And you can see their revenue pretty much only goes up over time. And their operating cash flow is getting pretty healthy in 2020 and 2021. This is the equity section on their 12/31 balance sheet. They have 1.9 trillion of equity. They're a really profitable business. Their retained earnings is almost 2 trillion yen. Since they have so much cash, they bought back 157 billion of their own stock. Let's look at the capital structure. 15 billion of equity, no debt, so they're 100% equity. And they have lots of cash on their balance sheet, nearly $12 billion. This blue line is their equity balance since 2015. The green line is their cash balance, and they have no debt. It doesn't get much better than this. Look how strong their capital structure is. And I gave them the highest whack on Finbox, 6.3%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 80 billion. We discounted those numbers back to today's weighted average cost of capital. We get a value of the company of $75 billion. We divide that by 939 million shares. And we get a calculated stock price of $80. They're trading at $63, so they're trading at a 21% discount. It's a buy according to the model. The company forecasts their revenue to be 1.3 trillion yen in 2025. That's about 10.3 billion US dollars. And their revenue forecast for 2022 is 13.2 billion, then 13.3 billion, then 12.7 billion. That's how I got their future revenue estimates. On average, they convert 29% of their revenue into free cash flow, so I multiplied their future revenue estimates by 29%. That's how I got their future free cash flows. The website Simply Wall Street is in the other direction. Their valuation is $34. They're saying the stock is 84% overvalued. This stock actually bottomed out in the beginning of 2019. If you bought the stock down here, even at the bottom of COVID, you would have still been up. Their sales did really well during COVID and the stock ran up to over $80. It did come down to 55, but now it's sitting in the low to mid 60s. In the past 5 years, the stock is up 105%. If you compare that to 3 of their competitors, ATVI is up 58%, NetEase is up 67%, and EA Sports is up 35%. So Nintendo is performing better than all of them. Activision Blizzard got a big boost when Microsoft said they may acquire them, but it does appear that deal may not go through. They have a pretty low beta, 0.62, so the stock moves about half the market. It's not volatile. It's gone down 13% in the past 52 weeks, while the S&P is up 7%. The 52-week low is 53, the high is 79. And the stock is trading between its 50-day and 200-day moving average. 300,000 shares are traded each day on this stock. Of the 939 million shares outstanding, 925 million are on float. 0.5% of the shares are held by institutions. They do pay a pretty good dividend. It's at 2.5%. The projection is for the dividend to decline to 1.9%. Their employee count has been growing slightly over the years. They're currently at 6,600 workers. In 2021, the CEO's salary was $600,000 US dollars, and their total compensation was $2.5 million, which is equivalent to 318 million yen. If you invested $10,000 into this company 10 years ago and reinvested the dividends, you'd be pretty happy at $37,000 today. That's a 14% annual return. 55% of the shares are held by institutions, 44% by the general public, and 1.5% by public companies. Their biggest shareholder is BlackRock at 6.25%, then Nomura, the Japanese investment bank, then Mitsubishi owns 4% and 3.6%. Let's look at their financial ratios. They have a good PE at 16.0, that's stock price over earnings per share, better than the market median and average. Their price to sales is 4.5, that's stock price over sales per share, price to book of 3.9, and price to free cash flow of 12.5. Let's look at their non-current assets. 84 billion of PP&E, 15 billion of intangible assets. They have lots of investments, 215 billion of investment securities and 113 billion of other investments. Let's look at their non-current liabilities. 21 billion of pension benefits for its employees and 25 billion of other. Their return on invested capital is through the roof, 121%. That's because they have so little debt and so much cash. They have a great ROE of 25%, much better than the market median of 7%. They can cover their current liabilities with their current assets almost 4 times, and their quick ratio is 3.5. Let's look at their current assets. 1.2 trillion yen of cash. They extended 141 billion of credit, so that's money owed to them. They have 560 billion of securities. These are investments. 87 billion of inventory and 51 billion of other. Let's look at their current liabilities. 115 billion of payables. This is how much money they owe their vendors. 5.2 billion of provisions. Provisions are funds that are set aside for future potential losses. They owe 157 billion of income taxes to the government and 249 billion of other. They generated 4.7 billion of free cash flow in 2021. And they have 11.7 billion of working capital. Working capital is current assets minus current liabilities. So they have over $16 billion of funding. The company's really well capitalized. The best way to look at ratios is to compare them to companies in the same industry. There are 28 companies in the same industry as Nintendo, and Nintendo is pretty much better than average in every single category. They have no debt, they pay a good dividend, they generate lots of free cash flow, they rank 4th in market cap. The only 3 companies larger are Activision Blizzard, NetEase, and Sea Limited. But it's a pretty tight race for number 1. Their price to book is better than average, price to earnings and price to free cash flow a lot better than average, price to sales is a little better than average. They have a really good ROA of 19%, that's how well you use your assets to generate income. And a really good ROE of 24%. That's how well you use your equity to generate income. So to summarize, I have them trading at a 21% discount. And this is the type of stock you should really hold long term. Because the company has been around over 100 years. They're always growing, they're always innovating, plus they pay a nice dividend. It's really hard to 5 or 10x on a stock like this because it's so big and established. But if you're trying to 5 or 10x, then you should just go to the casino. I rank their free cash flows 8 out of 10, their revenue 7 out of 10, and their ratios 8 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.